Joining me now with more on the impact across the financial sector and for investors, Caitlin Long is the chair and CEO of Avanti Bank, a crypto-friendly bank. Caitlin, I'm sorry, great to have you today. But
thank you.
Do you think it's really the retail investor who's interested in this product, or is it more for institutions who really can't deal with straight Bitcoin?
Well, certainly a lot of institutions like 401k plans and some IRAs need the product rather than Bitcoin itself. But there's certainly also a lot of retail interest in this. What everyone should be aware of, though, as you correctly said in the intro, is that this is not Bitcoin. It's not the same thing. And very likely the returns, if passed as prologue, are going to lag actual underlying Bitcoin by a quarter to a third. So there's a big tracking error in futures-based ETFs, in commodities, cash-settled futures-based ETFs, and everyone should expect that.
Would you be more in favor of, what would we call it, a cash Bitcoin ETF, or do you really believe not your keys, not your coin? If you want Bitcoin, literally, physically try to take custody of it and don't get involved with these kinds of products?
Well, that is definitely the best way to own Bitcoin because you don't have counterparty risk. Bitcoin is an asset that's not anyone's IOU. And as a result, you have the ability to be your own bank, to own it yourself, but you do have to take personal responsibility to educate yourself, invest in yourself in the knowledge of how to manage your private keys. The problem is that many don't want to do that. And as a result, we typically, they're looking for wrapped products like this. However, there are better ways to own Bitcoin than a cash settled futures ETF.
Sure, although it's understandable that a lot of people don't want to deal with all the steps of physical custody and that kind of thing. Let me just pivot, and again, as somebody who's kind of I don't want to call you diehard, but maybe a longtime Bitcoiner, what are your concerns about the price action today, specifically about some of the leverage, kind of the credit creation within the system? I thought you had a great line the other day about how people always warned that Wall Street would ruin crypto, but it's crypto itself where we're seeing this kind of speculative activity. What are your concerns?
That's right. This is the first bull market post-halvening bull market where we've seen leverage. For those who are not familiar, Bitcoin does have a very distinct four-year cycle that is tied to what's called the halvening, where the inflation rate of Bitcoin is cut in half every approximately 4 years. And we typically see big bull markets coming not that long after the halvening. The last one was in May 2020. And this is following the previous historical pattern really pretty well. And so what we've seen, though, this time is that because of all the financialization, we're seeing a lot of leverage that has entered into these markets. And it can cause price swings. And certainly I would say in the last few days, there have been a lot of investors waiting for the ETF approval. It is a positive sign, but it is a double-edged sword for the reasons we talked about earlier, where we're getting a lot more paper claims to Bitcoin than there are real Bitcoins. And there is no lender of last resort for Bitcoin. There's no one who will ever make more than 21 million of them. It's impossible at this point. And therefore, there's a lot more risk of the price being swung around this time. And we don't know what it's going to do without a lender of last resort in the next correction.